Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is through the trading week ending April 24th, 2015, and what a week it was. I've got on the screen here the NASDAQ cash index here, and I've got a monthly view. So each bar on this chart represents 1 month in time, and I wanted to kind of just step back for a minute and just kind of give you guys a picture where we've been, where we're going, and the risk that we have in the go-forward environment. You can see back at this point right here, that was the all-time high in the cash index, NASDAQ. And that was made just after the year 2000. And it was up at, as you can see here, this green line, 51.32.52. Okay? Now, a couple of other things on this chart that I want to show you here. You can see that at this pivot low here made in March of 2009, when we started our big trek up, I've run a Fibonacci extension, or rather a retracement from our current highs to where we are right now. And you can see these levels right here as potential pullback points on any huge downdraft in the markets. You can see this area right here, which while it's not a natural Fibonacci, it's one I use a lot and tends to work out very well in a strong market, is 0.236. So a 23.6 pullback in price as measured as the difference between the price at our lows in March of 2009 and the current highs at close today. And you can also see that was also resistance right in that area right there as well. And these are natural profit-taking points. These are natural cry-uncle points and so forth. So you can see here this huge trajectory that we've made, this huge run-up in NASDAQ. And you can see here that if I were to draw a channel like that, it's fairly tight. And I'm not drawing it very straight. And outside of almost a solid year right here of staying within a range, and then 2011 really having a little bit more of a down year right there, and 2010 finishing higher with a little bit of a pullback in the summer and then a strong finish. Ever since we got through towards the beginning of 2013, we have been on a tear up. I mean, just very strong, very fast. And you can also see the vector of this upward movement is that way there. The vector here in a wider channel is more like this right here. So, you know, one of the things I like to look at is just the vector of the rate of ascent. You can see that vector right there, but then you can see this vector right here, and then as we get closer in time, that vector right there. So what we've got is an increasing angle of attack, which if you've been in the markets in any length of period, you know this angle of attack cannot last. It's impossible. And generally, when the vector gets higher and steeper as you go forward in time, that means we are nearing a topping action before a pullback. You can see right here on the left-hand side of your chart, as I box it in, you can see we had a little bit of a vector right here, and then all of a sudden it was to the moon, just like that. And then we had that one final month of capitulation, and then, you know, off we went to the races, and then we gave it all up. So I'm more worried, and the risk of a pullback is much greater than a continued move higher. Now, I will be frank and say I have been holding NASDAQ futures, long futures, to the upside. Why? I take the trade as long as the market has given it to me. I'm not here to debate the logic of, hey, you know, it shouldn't be going up this steep, so it's going to pull back tomorrow, so I'm not going to take it long. I'm taking it long now because that's what the price action has given me. But what I'm also telling you is that the risk of a down move is getting greater and greater. And I don't mean a 1 or a 2-day move. I'm talking about a move that's going to last for 2 or 3 or 4 monthly bars. You can see this right there was just a very tiny little move here. This move right here that went down, we started here and we finished down there, took about 6 bars. That would make it 6 months, okay? This move right here that started right there that ended down there was about 4 months. This bigger move right here in 2008 started here and then ended down here, and that was like about 14 months. We haven't had, in looking at this monthly chart, much of any downward movement that even shows up on this chart. So I do believe we're going to get a 3-month plus move down where it could be 3 or it could be 4 months, and then we're going to see a pullback. And you'll see these colored price level lines I have on the chart. These are as it relates to 2015. Okay, and I will show you more about what these colors mean when I go into a day chart. But I do believe that we're going to probably test all of these levels, maybe even come down below and test this area right here before we can get more people confident in putting more money in. Because, of course, the higher we go, then the harder it is for people to put on new long positions because the risk just gets a lot more to the downside. Now, a lot of money, keep in mind, this is not a normal market. A lot of money is flowing in to these markets because there's nowhere else to go. You've got over in Europe right now, there are about 25% of all debt issued, sovereign debt issued across all the countries in Europe now that is under a 10-year government notes or bonds is under 0% interest rate. 25%. It's unbelievable. So when you've got, in fact, Sweden just came out a couple of weeks ago and issued the first 10-year negative interest rate. That means you got to pay them money to hold your money. I mean, it's absolutely insane. You see that very rarely, but you do see it, excuse me, in times of inflation where it's really tough because money is actually being deflated. So when you have this environment over in Europe and over in Japan, you've got a very similar situation. Well, guess what? Money from Europe and money from Japan flips over to the U.S. and it comes into U.S. markets. We are still the best market globally, followed behind by Great Britain and then probably by Germany. All the other markets are very weak. So when that money flows in here, you create these artificial environments, which is why you may have heard some people talk about asset bubbles, and that's what we're getting here. So I've got a lot of concern about this market. But again, don't get me wrong, that does not mean I'm hiding in the basement and I'm buying 100-lot puts in the Spiders or SPX or any of these others. I'm taking the trade as I see it. Right now it's up, but I don't believe we got too much more upside here. And the higher we go, I think the bigger that bubble is going to build, okay? Now, if we come in here, and let's just take it down to the daily, and I'll show you a breakout here. You can see that green line right here. That is the all-time highs of the NASDAQ. That red line right there that I just put on is the 2015 high. So we actually today on an intraday basis for the NASDAQ went up to 5,137 cents. The all-time high of NASDAQ is 5132.52 here in green. That's the intraday all-time high. So you can see where we're sitting here in this market. The opening price for NASDAQ is 47.60. So you can see NASDAQ moving higher and higher. Now, if I take it, I'm going to go into the NASDAQ futures here for a second, and I'm going to show you, we've got the same colored bars, and you can see if we go out and we look at a weekly chart here of NASDAQ, it's been on fire. Here's that channel I was telling you about. This channel goes all the way back to the summer months of 2012, right? And we've stayed pretty much confined within this very narrow band, and the vector is up like this, okay? Even last October, when the SPX really cratered, it didn't close outside of this band or this channel. It closed right here, intraday or intra-week, but the bar stayed inside. Now you can see we're at the top of the bar here. We've got an all-time high, or a 2015 high, 45.36 in the NASDAQ. Excuse me, the NASDAQ futures, and you can see the opening price here. And then this is the lows for 2015. But look down here at the MACD. We're getting what we call in our group a bed. That's bearish divergence. These are high prob trades that suggest that weakness is going to come in, and it will suggest a pullback. Now, I've got a little bit of a support zone sitting right here. That's a little small pullback, but it does keeps us north of the opening price for the year. But I showed you the monthly chart. Now, I can't say that the next pullback is going to give us that 3 or 4 month pullback run, but I do expect something like that to happen, and the risk of it occurring is getting greater and greater the higher we move here. So now you can see here we made highs, and if we come into the daily chart, let's take it in even tighter. Here's the daily chart right here. You can see we broke out. We made the previous high for 2015 made on March 2nd. We finally broke out, and we made this new high, 45.3625 right here. Again, on the daily, just like on that weekly, we're setting up for a nice little bearish divergence, okay? Now, that would suggest a little bit of a weakness on a go-forward basis. You can see this area here, which I'm looking at as a support zone, just south of the 50 EMA, which has got that slope to it. The key for me is going to be this pivot low here sitting just above the opening price. If that holds, then I think any pullback here is going to represent a bit of a consolidation moment and then another move higher. And that'll give us an impetus to probably go even higher. And at that point, we could experience a bigger pullback. Okay, so that is what I'm looking at right now. Now, NASDAQ is one of our stronger markets here. If we look at the SPX cash index, and let me just take this out here a little bit. So let me move over here. I will show you on the daily chart right here. You can see right here on the cash index, again, today we made all-time. Now, this is all-time highs on the cash index of SPX, 2120.92, right here. All right, you can see this zone that I've got here that is a pretty good little support zone, and it's going to provide a lot of resistance to us. You can also see, again, on the SPX cash index, again, another bearish divergence, what we call a bed. That means that price is probably going to be a little bit weaker, I suspect, and here's this upsloping channel here on the SPX. Now, I showed you the upsloping channel on NASDAQ. It stayed fairly consistent. It stayed pretty much inside the channel. If we look at the SPX, you can see the same thing, although the SPX really suffered a bigger pullback in October. You can see here on this weekly chart, there were actually 3 weeks where we were outside this zone, and it quickly got back in again. And here was just a breach, and then we moved back in. And we've been riding the upside of this zone right here. But you can see that bearish divergence. It's really kind of surprisingly just been slowly tapering down like this, and it's been and you can see it can last a long time, but only recently has it really, the vector of this divergence has started to pick up. So if we break this lower channel line of this upsloping channel that we've been in since late 2012, we're going to come down and chest these areas down here again, which would mean we break possibly the opening price of the SPX, which was 2058.20 for this year. So I've got some concern, folks, about where we are and where we can go. Again, now if I come back into the daily, or let's come back into the daily here, and I'm going to stay on SPX for now. I've been trading this. We still, even though we're moving up in this direction, we've been kind of in this box, right? But you can see how we've just been riding this vector up. This right here has been providing support for us. I think that's probably going to break. We've also, you can see the Elliott wave count of 3, 4, 5, but I don't like this Elliott wave count, so I'm discarding that. I don't like that count. It's a little bit too choppy for me. But I will say that from my perspective, to me, again, the risk of a bigger move is to the downside than to the upside. What do I mean? Typically, I could see anywhere from a 5, near term, a 5 to a 7% move to the downside, and maybe a 1 to 2% move to the upside, okay? Something like that. So I'm looking at a smaller upside potential move versus a larger downside potential move. I may be wrong, but I believe I'm not. I'm still playing, now the SPX, I'm playing a range-bound market because up until about the middle of March, vol's been high, but it's pretty much fallen off the table now. So the volatility is really not in the market right now. So that also tells me the market's getting a little bit complacent. And this move right here was right at, I mean right at 10%. From that high there down to that low there, that was about a 10% pullback. So that gave us our first 10% pullback in over 3 years, 3.5, 4 years, a long time. I don't know if we're going to get the kind of pullback we got in October up here, but I do believe we're going to break this upsloping trend line, which has kind of served nicely as support right there, and we'll probably test our opening price here of 2058. Okay, so that means we're going to get probably an 80+ handle move to the downside over a several week period. Again, I don't know if it's going to be happening next week, but I think the risk of it happening is getting greater and greater. Keep in mind, next week we've got the FOMC coming out, and there are a number of things on the horizon that could provide a trigger. I don't really care about triggers. I'm just looking at price action. Let the TV talking heads tell you why the markets fell. They'll always find a reason, which makes them always right. But that's not, you and I know as traders, that's just a bunch of gobbledygook. It's horseshit. For us, we're following price action. I'm just telling you that there are a number of things on the horizon that could set this market in a tailspin. The Greeks exiting the euro, they're coming up in the next 2 weeks, the second week in May, to be able to stay in the euro or not. They got key billion-dollar payments coming due. You've got the FOMC and talking about the interest rate projections coming up in a few weeks, or next week rather. We got a continuation of earnings and several other things on the horizon that could just set this thing off. So again, that's kind of how, excuse me, I'm seeing the markets right now. And again, if we look at volatility, and let's just look at the we'll look at the VIX here. It finished Friday at 1229, very low. You can see we're down here in this shaded zone right here, and every time we've come down here, you can see for quite some time, we've just stayed down here, but we generally bounce off of these low levels, and we bounce and we move back up. So we're sitting at this level here, and I suspect the risk of a bounce up is high, which would give us that pullback, right? I mean, one doesn't precede the other. The pullback's going to drive volatility back up. So that's what I would suspect is a higher probability move The other thing is if we look at treasuries and we look at bond market, the bond market, and let me come into a let's just increase the size a little bit here, and we'll just get rid of this so you guys can see a little bit better. You can see the bond market has moved down, but it is setting up here for probably what I would say would be one final capitulation move up. All right, you can see this channel here. If the bond market breaks this channel right in that area there, and let me just duplicate this thing right here. So let's dupe it, and then let's move it down like this right there. So if the bond market breaks this to the upside, bond market's going to take out these prior highs, come up here, and then it's going to set up for a big downside move. I've been playing the bond market to the downside right here in this tight channel, moving to the down. We had an up day in bonds today, but I do believe that, and let me just come back in. If we look at the 2-hour chart in the bond market, which is kind of where interest rates are going, it's saying near term bonds could roll back over right here and come back down. And I've got a tool. I can use a Fibonacci extension, or on this thing here, it'll simulate a Fibonacci extension. And you can see it's giving me a couple of different potential price resistance points between these two circles here, near term or further term up. We can run up a little bit before it rolls back over again, and then hits this downside here. So one of these near term is going to prove accurate, but the bond market is in a state of flux as well. But I am still short bonds right now. I think maybe not near term, but I do believe bonds over the next 3 years is just going to steadily grind down. You know, I don't think interest rates are going to rise as fast as people think, just because of all the stimulus going on all over the other countries in the world. We've never done this much stimulus globally at the same time. And then have one country, i.e. the U.S., take our stimulus off and let the others continue to run. So it's going to create major asset bubbles, and it's going to create imbalances. So that's where we're sitting right now. Now, in the currency market for our members, there are a couple of currencies that I like to the long side and to the downside. We're waiting for a setup in a few of these. I've talked about silver and our long-term play in silver, energy in the oil market. I do believe this is a 2-hour chart, but if we come back into the daily, you can see right here how we broke out of this range right here. I think oil, it's got a little bit more upside to go, but I think we're going to be in a trap here somewhere between. I'm now saying the bottom may have been formed in oil, but I think the top is coming in pretty quick. I don't see too much more upside in oil, maybe up to 65, but there's just too much inventory floating around out there right now to this to really be a big thing. Gasoline, we're in the seasonal period of gasoline, so we had this breakout in gasoline right here, but I don't see a big run up in gas either right now. So that's kind of where we're sitting there. And then, of course, one other one that had a break to the downside, in the corn market, you can see we broke down here. If we can break out of this range, it's going to have a nice run to the downside. So that pretty much describes where we are right now. Members, we've got our session Sunday night. I'd like to see you looking forward to talking about what we got coming up for the week. If you're not a member of our group, I highly recommend it. We're running good this year. We've got some nice things going on. Check us out on our website, and we've got a number of different options, membership options for you. Come on in and check us out. I'd like to see you on the inside. Otherwise, have a great weekend. Members, I'll see you Sunday night. Bye now.